Good morning. Welcome to Money Talks, your intel on the Philippine markets and the economy. Sitting in for Cathy Yang, I'm Regina Lay. In the headlines today, U.S. President Donald Trump moves the implementation of 50% tariff on the European Union to July 9th, but not after expressing frustration over the pace of negotiations. President Marcos has landed in Kuala Lumpur, Malaysia to attend the 46th ASEAN Summit, where he is expected to renew calls for a code of conduct in the South China Sea. And a visiting forces agreement-like military deal between the Philippines and Canada is ready for signing, according to Defense Secretary Kibo Teodoro. Good morning. Happy Monday. U.S. President Donald Trump says he will give the European Union a month-long reprieve as far as tariff goes. On Friday, Trump recommended a 50% blanket tariff on all European goods starting June 1st, claiming the EU had been hard to deal with on trade.
They're just very slow moving. I've been saying to everybody, they've treated us very badly over the years. I'm not looking for a deal. I mean, we've set the deal, it's at 50%. But again, there is no tariff if they build their plant here.
On Sunday night, Trump agreed to a request from European Commission President Ursula von der Leyen to extend the deadline to negotiate tariffs until July 9th. Von der Leyen said the 27-member bloc needed the extension to quote-unquote reach a good deal. The EU earlier said the trade talks should be guided with respect, adding that it stands ready to negotiate in good faith. Meanwhile, Apple shares are expected to come under pressure this week after Trump warned the tech giant he will impose a 25% duty on all iPhones made overseas. The warning was later extended to all smartphone makers manufacturing products outside the U.S. Trump has repeatedly scolded Apple's CEO Tim Cook for planning to shift final assembly for many U.S.-bound devices to India. And analysts are predicting that iPhones made in the U.S. will cause a sharp rise in prices, potentially adding between $1,500 to $3,000. And Cook recently told investors during an earnings call that they expect to face a tariff burden of up to $900 million this quarter alone. If trade talks with the EU have stalled, well, trade talks with Japan are at least making progress. That's according to Japanese Prime Minister Shigeru Ishiba, who told reporters on Sunday that he intends to refine discussions when the group of 7 leaders meets in Canada next month. Ishiba and Trump held a 45-minute phone call on Friday to discuss trade, security, and diplomacy. At the same time, Japan's top tariff negotiator participated in a third round of talks in Washington. Tokyo is facing a 24% reciprocal levy, currently suspended along with other countries until July. Meanwhile, Trump shocked markets Friday U.S. time when he approved a partnership between U.S. Steel and Japan's Nippon Steel. He stopped short of endorsing Nippon Steel's proposed takeover of U.S. Steel, which was blocked by ex-President Joe Biden over national security concerns. The frontrunner of South Korea's upcoming presidential election calls for more time to reach a deal on the so-called Trump tariffs. Lee Jae-myung on Sunday said the July 8 deadline should be reconsidered to find a mutually beneficial agreement between the two allies. South Korea's Minister for Trade and Industry admitted that there's not enough time to iron out the terms given the upcoming elections. Lee is leading in the surveys as the country heads to the polls on June 3rd. The snap elections were called after the Constitutional Court approved the impeachment of Yoon Suk-yeol over his martial law declaration. Lee considers the tariffs one of the biggest challenges for the incoming administration. Moving on now, a visiting forces agreement-like agreement between the Philippines and Canada is quote-unquote ready for signing already, according to Defense Secretary Gilbert Gibo Teodoro. Teodoro told reporters this on Sunday in a chance interview. Once signed, this becomes the fifth such agreement of its kind for the Philippines after a full VFA with the U.S., a status of VFA with Australia and New Zealand, and a reciprocal access agreement with Japan. These agreements allow both countries' armed forces to enter and train in each other's territories. The Marcos administration has also kicked off negotiations with France for a similar agreement. Separately, the Philippines and Canada are also set to conduct exploratory talks for a free trade agreement this coming June. Trade Undersecretary Alan B. Gepti told reporters on the sidelines of the Business World Economic Forum last week that the agreement, if it comes to pass, will benefit the country's electronics and semiconductor sectors as well as some agricultural products. Data from the Philippine Statistics Authority show that Canada is the country's 20th largest trade partner last year, accounting for $1.44 billion US. RCBC Chief Economist Mike Ricafort said that an FTA with Canada will allow the Philippines to import more meat products and diversify our export markets and lessen reliance on the U.S. in the long term. Trump's broadsides against the U.S. and Apple caused U.S. markets to slip last Friday. Let's take a closer look. The Dow and the S&P 500 both fell by 0.6%, and the Nasdaq slid by 1%, taking it down to 18,700. Benchmark 10-year Treasury yields, on the other hand, fell to 4.508%, while gold prices, which have been rallying all throughout this year on market uncertainty, has rallied once again. It's now sitting at $3,363 per ounce. European markets closed Friday's session lower due to Trump's tariffs. The regional stock 600 slid by 0.9%, and both Germany's DAX and France's CAC 40 losing about 1.5%, well, more or less individually, and the DAX now sitting at 23,629 thereabouts. U.S. futures climbed, though, after Trump extended the deadline on trade talks with the EU, with the Dow rising by nearly 0.75%. The S&P gained about 0.8%. It's been on a shaky ride these last couple of weeks, while the Nasdaq is up, finally seeing some green, and is now up over 1%. Again, these are U.S. market futures. Actual U.S. markets are closed today, Monday, for Memorial Day holiday in the U.S. Let's take a closer look at Asian markets now. They're a bit of a mixed bag this morning. The Australian ASX 200 opened flat this morning, but has now slightly declined about an hour into trading. South Korea's Kospi is up by was up at a quarter of 1% at the open, whilst the Japan's Nikkei also inching up ever so slightly by 0.1% at the market open, now sitting about 37,209. As of 9:35 a.m., the XS is trading lower, while the Kospi and Nikkei, as we said, are both up over 0.6%. Asian markets have been trading sideways these last couple of days over uncertainty over the tariffs as well. President Ferdinand Marcos Jr. has arrived in Kuala Lumpur on Sunday for the 46th ASEAN Summit, which starts today. Aside from echoing the country's commitment to peaceful resolution in the West Philippine Sea, the president is also expected to talk about working on the region's common position on U.S. President Donald Trump's new tariff regime during the two-day summit. Today, Mr. Marcos will join the ASEAN Plenary Summit and Retreat, as well as the leaders' interface with representatives of the ASEAN Inter-Parliamentary Assembly. Accompanying the president is Trade Secretary Cristina Roque, Presidential Communications Secretary Jay Ruiz, and Mindanao Development Authority Secretary Leo Tereso Magno. Executive Secretary Lucas Bersamin, Justice Secretary Jesus Crispin or Boying Remulla, and Agrarian Reform Secretary Conrado Estrella III will serve as the caretakers while the president attends the summit. All right, let's bring in our first guest now today to tie up all these loose ends. We're joined by Joshua Rafael Cortez. He's the Faculty and Practicum Coordinator for Diplomacy and International Affairs Program at the De La Salle University College of St. Benil. Joshua, good morning. Thanks for making time for us.
Good morning, Ms. Regina. Thank you very much for having me also.
There's so much to talk about, but let's start off with the latest trend, which is the president in Kuala Lumpur, Malaysia today to attend the 46th ASEAN Summit. There's a lot of expectations there for him. He has said that Malacanang has said that he wants to raise the issue of the code of conduct again over the South China Sea. But in terms of the trade aspect of things, what's realistic to expect here in terms of ASEAN coming together on a singular tariff response to the Trump administration?
All right. Actually, even before President Marcos headed to Malaysia, as early as Saturday or yesterday, during the senior officials meeting, they have already discussed the senior officials of ASEAN, which we are represented by the incoming DFA Secretary, Teresa Lazaro. They have already expressed their mutual desire, their collective desire to actually work together in order to safeguard ASEAN economies in light of the tariffs being imposed by the Trump administration, given, of course, that most of the economies here in the region are developing in nature. Therefore, if ever that we don't get to work together, then there's a big possibility that these tariffs would actually heavily debilitate our economies. So they are now in the process of actually discussing on how to navigate this. And at the same time, they have already discussed and finalized the so-called China-ASEAN FTA 3.0, which is basically yet another instrument for the regional bloc to actually find and tap China as an alternative market for Southeast Asian products. So that's the latest development so far. And concerning the China-ASEAN FTA 3.0, they're actually expecting to have it signed, to have the document signed once ASEAN convenes again during the latter part of 2025.
Isn't that going to be a tricky balance to try to thread, given that the other big issue on the table is the code of conduct with China, right? And there's major sticking points there. But on the other hand, I see what you're saying about the need to redraw the trade lines now that everyone is facing some tariff penalty. How best do you think the ASEAN can come together to tackle these two conflicting issues?
What's interesting with ASEAN is actually the fact that we get to adhere to the ASEAN way. Therefore, given that a big portion of the tensions that we have right now with China, politically speaking, is centered on the Philippines, then having to maintain a healthy balance would not be a problem at all for the regional bloc, given that the Philippines also is taking the primary lead or is also the prime mover in terms of crafting the COC. Therefore, while also focusing on the pressing economic challenges that we face today, ASEAN also has the time, also has the opportunity, the luxury of time to actually look into the economic facet. And given that we consider China as our largest trading partner as a whole, as a bloc, then really give special importance to China in the economic facet. And then concerning, of course, politics, despite the fact that politics and economics are interrelated in a way or another, there is a minimal chance that the crafting of the code of conduct will be an impediment towards these milestones in the trading between China and ASEAN.
Do you see an opportunity here, especially since the Philippines is set to take over hosting duties for ASEAN next year? So we've got about less than a year's worth of leeway. Where's the opportunity here for us to begin those conversations, whether that's trade or diplomacy?
What we can do, given that our chairmanship is already near, is that a lot of dialogues are already happening right now. For example, in Malaysia, we already had a meeting with our predecessors for ASEAN chairmanship. And at the same time, President Marcos may also opt to maximize this opportunity given that they are in Kuala Lumpur, not just for the ASEAN summit, but also for the GCC China ASEAN meeting, to actually begin talking once again with his foreign counterparts on how we can better navigate the situation we're in. And this is with the hopes, of course, that we can reach a code of conduct by next year. We can finalize the document by next year, which would be very much significant given that ASEAN will be held here in the Philippines.
I love your optimism, but we will have to leave that there for now because we've run out of time. We hope to have you back on the show another time. Thank you so much for your insights, Joshua Rafael
Thank you very much
Cortez.
also.
He's the Faculty and Practicum Coordinator for Diplomacy and International Affairs Program at the De La Salle College of St. Benilde. You are watching Money Talks. Coming up, the Bangko Sentral ng Pilipinas is eyeing a fixed inflation rate next year onwards. And Meralco's power generation unit says it's on track to operate its gas-fired power plants in Batangas by the end of the month. Keep it here on One News. Welcome back to Money Talks. I'm Regina Lay, sitting in for Cathy Yang. The World Bank Group is ramping up support for the Philippines through a new 6-year partnership plan. This is under the newly approved Country Partnership Framework, or CPF, which will run from 2026 to 2031. The CPF is the joint strategy of the World Bank Group's arm, the International Bank for Reconstruction and Development, or IBRD, the International Finance Corporation, and the Multilateral Investment Guarantee Agency, or MIGA. Aligned with the Philippines' development goals, the CPF will be focusing investments in health and education, private sector jobs, digitization, as well as economic and social resilience. World Bank Division Director for the Philippines, Malaysia, and Brunei, Zafar Mostafoglu, says investing in the capacity of local governments is critical for improving access to quality of public services. He said it will foster the development of human capital and resilient communities while also increasing the potential for sustained long-term growth. The Bangko Sentral ng Pilipinas is now eyeing a fixed target for inflation, shifting away from the target band of 2 to 4%. This aligns with places like the United States and the European Union, where the guidance is just one number, BSP Governor Eli Remolona said. He also suggested that 2% would be an appropriate target for the country, emphasizing that it cannot be too low as it may affect our economic output. The central bank explained that it's not zero to allow changes in relative prices, and they are currently working with the International Monetary Fund to study the shift. Inflation has actually been on the downtrend this year, coming in at just 1.4% in April, much better than what economists had predicted. That's also the lowest figure since November 2019, thanks to a significant drop in rice prices as well as transport costs. Meralco's Powergen is planning to launch its full capacity in Batangas this week. MGen President and CEO Emmanuel Rubio said that they are on track to operate the 2,500 megawatt power plants in the province. 2 of the gas-fired units of the Excellent Energy Resources, Inc. are already operational. The 3rd unit is currently waiting for a provisional authority from the Energy Regulatory Commission. The Batangas liquefied natural gas storage facility is also on track for completion this month, and it will be the largest LNG facility in the country, envisioned to bring down power costs. All right, let's take a quick look now at Philippine markets. The Philippine Stock Exchange opens today, Monday, lower, but just slightly, just by 0.1%, sitting at 64.02 at the open. And of course, it bounced back on Friday by over 1.7% after President Marcos spared his economic team from the cabinet overhaul. Meanwhile, the Philippine peso is also looking a bit flattish at the moment. The 2 figures are the same. As you can see, it closed Friday at 55.25. At the open, it's not moving very much either. Let's bring in our second guest today to talk about the market movements. We have First Metro Securities consultant, Aaron Sai. Hi, Aaron. Long time no speak. I think you're on mute.
Thank you for having me here. I'm sorry.
Hey, you haven't changed a bit, by the way.
Thank you.
But on the other hand, so much has changed in the markets. And let's kick off with the cabinet shock of last week. Going to this week, have the markets gotten over it? And what do we have to look forward to?
As for the market, actually, I think the market has not expressed any concern just yet. No, as far as the economic theme is concerned, I think that it is clear that it's still intact. No, and I think this provides some stability, about the influences around economic policies, and definitely its implementation. However, the team is not just composed of the economic team. No, as for the rest, especially those that will assume the post for infra-related, which are closely related as well to the markets, infra-related, which are DPWH and the Department of Transportation, as well as those that take leadership over basic and crucial services, the OJ, the Health Department. We just hope that those who will be appointed eventually to these posts are capable to carry out their mandates beyond the politics. I think if we can still maybe borrow some guidance from what the recent election has produced, so there are some changes in the composition of the House, but I think for now, at the very least, we don't know how the politics and the alliances would shift as we continue with this administration. No? But as for now, I think there's still no concerns now for the market. No? So we'll just look out for those that will be assuming the position, no, the department secretaries, not for other departments that have yet to see their leaders.
Oh, it feels like the ground is shifting a little bit again. The flip side of it is that you're saying that the markets and the business community in general have been happy by the fact that he's retained the economic team.
Oh, definitely, as you know, in business, stability is a very crucial, it provides a little less uncertainty in the world of uncertainty that business leaders and those that are playing quote unquote in the market, face every day, So at least this is a good breath of stability, amidst all the uncertainty, especially in the macro front.
And then just very quickly, Aaron, we're running out of time. What do you think of this idea of shifting to a single-digit inflation target that the BSP has floated, moving away from the target band?
Yeah, I thought that the target band could provide some more stability, about the inflation forecasting and guiding the market at that. No, but again, the central bank is one of the more reputable government institution, and I think the professionals working in the BSP has always been vigilant on how they can improve, how they do their work, and of course one of which is to benchmark with the best there is. So if they think that the central banking community is better served with a point estimate of inflation, and the market can be guided better than a range, then there might be some merit on that. But as for now, I think it's still on a developmental stage, an exploratory stage at that. As you mentioned a while ago, there will be some consultations with multilaterals on this. And I hope that what they will reach after those consultations would be the better guide. I think the range estimate or the range guidance work quite well for guiding the market. We cannot really point we have a really point estimate in this very volatile indicator. But if the market, especially in the benchmark states, was able to implement it effectively, then maybe we can give it a shot.
Yeah, and you're right. The BSP is a very well respected central bank amongst the global central banks. So let's see. Maybe they're seeing something we're not. We're gonna have to leave that there for now. Thank you so much for making time for us today, Aaron Sai of First Market Securities. And before we go, Signal TV, our home network, just took streaming to the next level with the launch of Signal Super. That's a first-of-its-kind app that lets one access multiple streaming services in one place. To tell us what's in store for viewers, here's mobile journalist Isa Abelio.
Tired of juggling multiple apps and streaming subscriptions? Well, there's finally a fix for that. Signal officially launches Signal Super, the first and only streaming aggregator app in the Philippines.
Developed in partnership with India's Tata Play, Signal Super puts multiple premium platforms into a single app with one login, one search, one subscription.
Signal Super was built to take the complexity out of content. Signal Super delivers a beautifully simple experience.
Find everything you need in one place. Together with Signal Play and Pilipinas Live, watch K-dramas on View, blockbusters on Lionsgate Play, rom-coms on Hallmark Plus, HBO hits on Max, and documentaries on Fuse Plus and Curiosity Stream. This venture was built over 2 years, modeled after the success of Tata Play Binge in India, now tailored to the Philippine market.
We're trying to push the envelope, the boundaries, and transform ourselves into a credible multimedia content and platform company.
With this launch, Signal now sits in the leadership position in the OTT aggregation space, and a big leap forward.
This is more than just a technology launch. It brings to mind the power of technology and content to bind people together.
Signal Super also offers value for money with the premium plan going for 499 pesos per month and the premium plus going for 799 pesos per month. Introductory prices are 50% off until June 30. Whether you binge dramas, stream sports, or unwind with feel-good flicks, with Signal Super, all you need is one. Mobile journalist Isa Abelio, we are One News.
Signal Super, all you need is one. Download it now. And that's it for Money Talks. I'm Regina Lay. Catch us again tomorrow at 9:30 a.m. here on One News. Have a great day ahead.